Good morning, it's Harvey Jackson. Just going to get through the news here today. Canola markets are traded the limit down overnight and now come off the limit. Just somewhat like what I expected, but gap lower. Seasonals still remain, and the fundamentals still remain bullish. But let's just get into the news here. Um, just have a look. Canola is excluded, but the oil and meal is uh, is is a part of the tariff, and including peas and 25% duty on aquatic products and pork. There's also news here that's the bullish part. It still remains bullish. There's problems with the output in February for palm, so palm oil has some strength. You look here, so ending stocks. China holds the most ending stocks of the canola itself, greater than Canada even and Europe. Just a FYI there. And they have all kinds of processing. So the other part of that is they might not have a whole lot of meal carryout, but they have the largest carryout of the canola oil stocks as well. So just keep that in mind as well going forward. Like they're not going to punish themselves too greatly. And with the replacement of soy meal or soybean meal being so cheap, they can just use that as well. Sure, you can say that they need it's not it can't be replaced. Every product can be replaced, especially if you work on it a little bit. So, seed exports by country and percentage. So if we go to who's bought this last short while here, so Jan is supposed to be over here, but I didn't take the time to do that. But you can see that there is a whole list of countries buying seed so far this crop year. So you can see China is the biggest throughout all months here in the orange, and then you can see there's France, Germany, Mexico, Japan. Everybody on this list is actually buying here now, and I would expect once that St. Lawrence Seaway opens up, you'll probably see a little bit more to Europe as well. So each so the seed exports just showing the actual quantity to date. So you can look at the scale here to be able to get your quantities. Maybe just pause and have a look. Some of them are not great and not very much as well. Meal exported by the countries, and there's just three in this short timeline as well. And Vietnam, they must buy mini bulk bags or something because it's not very much. It doesn't even hardly show up, so you really have to look for it. But United States by far is buying all or the large portion of the meal. And then if you go by the quantity, you can see what percent that is, and does show up a little wee bit on the January here as well. Here's just your percent, so you can just figure that one out. It's below 30%, and you might as well say the United States buys the rest. And this is just January. So oil exports in the last length of time. So you could see China has been a good size exporter or importer of oil in the past, but now they're growing more crop of their own and they got cheaper soybean oil. So how is this going to get affected? Because you can see that they, even the last few years, it's been almost knowledgeable, right? So here's just your canola oil just in a different chart, soybean oil in a different chart. And that's all I have for you in charts there. So you may want to stop and have a look at that. But canola is not traded $40 lower as of right now. It is down 38 on the front and 20 on the November. Rapeseed is 850. Soybean oil is down almost a whole penny. Palm oil is down 108 ringgit. Crude oil is up. Soybeans are 2.5 cents down, and your wheats are up, and your Canadian dollar is down a little bit, and corn is up overnight. So this is what it looks like when you got a gap here. So it's gapped it, so it where it closed, it just went straight down. It actually caught a couple of growers with 615 orders in. It did fill them, but we'll be looking at a reentry here right away to go along. So here's the gap on the minute chart. Basically, just went all the way down to 615 and then closed lower, and then it's come off the bottom here. So this is just what it looks like here when you look at the forward curve. Um, you need both May and July to trade $40 down for them to lock the limit. I would imagine there's a lot of sales and a lot of buying happening at these values because canola seed is awfully cheap compared to other commodities. So here's your European rapeseed. It is $153 more expensive, priced in Canadian dollars than Canadian canola with this drop off that we had because they didn't have the same drop off, but they did gap lower as well. Soybeans, red day, I don't think it would have been. I think we might have pulled them down with our canola stories and canola values going down. The same thing with the palm oil. I think it would have probably had a green day if we, with their news that they have uh, depleting stocks there in that story that I quoted at the beginning. And soybeans, red day, but it's got the right trend so far. I'm not really too interested in going long here on beans, but that planting intentions report will be coming out in a couple of days, or the USDA will come out in a couple of days, and then our StatsCan will come out after that. Soybean meal gapped higher, and the reason for that is if you're going to put an export ban on other meals, it puts pressure on this market to get a little bit more demand. And sure enough, we gapped a little bit higher. Crude oil pretty well flat, but a little bit up. And the Canadian dollar basically still trading in this range from the blue line down and the black line. Let's get into wheat. Nice trend here, upward trend. Slow stochastic is still telling us to buy in both months. This is the month that we're most of my clients are looking at trading. So we're going long here to exit up here. Yeah, go long and sell out up there. Yeah, here's your Chicago wheat, and your milling wheat has actually come off a little wee bit as well, closer to the bottom. Um, and corn, nice trend. Should be long on this one as well, I think. And here we are. March tomorrow is the crop production, and then StatsCan day after that. And that's all I have for you today.